Hello and happy Friday, May 1st. Welcome to another exciting edition of Rate Desk. I'm your host, Michael Thomas, here to talk about multifamily interest rates and other news. Jumping right into the markets, they're slightly down today, not in a big way, but just, they're slightly down. Good news is that the crude oil prices are up. They're hitting a high on a run right now from, the April 3rd week. That was the last time we saw oil above $19 a barrel. So that's where they're trading around today in the $19 range. That's good. That's excellent. The U.S. Treasury yields, which we closely follow as lenders, not much change. A couple ticks up from where they were yesterday, about 64 basis points. These are being massively held down by the U.S. government's long-term asset purchases. Those are continuing. They are forcefully doing that, and that is really keeping us in a very stable, permanent interest rate environment. Thank you very much to the Federal Reserve for doing that. Next, jumping over to the interest rates on 223F, relatively flat to yesterday in the mid-range, quoting a 2.60 interest rate on a 35-year fixed rate loan. And then on the 221D4, we're quoting a 3.25. That's 325. Remember, folks, to add the mortgage insurance premium, which we call the MIP for short, to that interest rate. And that gets you your all-in debt service, principal and interest, plus MIP. Those are payments you have to make if you have a HUD loan and you're servicing your debt. If your property is an existing property and it's a refinance, you are either going to be paying 0.25 for green energy efficient properties, or you're going to be paying 0.60 for properties that are not. The exception to that is if you have a level of affordability, which does change your MIP and also reduces it depending on the level of that affordability. And we can get into an episode down the road that gets much more specific on how that actually plays out. Jumping over to the agency desk, Fannie Mae rates flat to yesterday, looking at 320 there on a 10-year for the Fannie Mae DUS, and the Freddie Mac is 3.40. Now, Walker & Dunlop just announced they did the largest loan in their company's history for $2.4 billion. That is billion with a B. Now, let me talk for a second about what I think you can gain from that. I attended an investment seminar years ago, and the investment strategy in that seminar was what I would call follow the leader. And the premise of it was looking at the stock market and the executives that are running companies or in the C-suite somewhere and seeing what they do with their stocks. So if a CEO is doubling down on their stocks, maybe it's a time there's going to be some good news, or, it's the thought of just kind of follow the market leaders, see what they're doing, gain some insights on your portfolio from that and decisions that you can make to that respect. You could apply that same principle to multifamily. This $2.4 billion refinance was for a very large owner out in the East, my old home state where I was raised and went to college, Virginia, and they've got over 22,000 units. So they've refinanced over, I think, 67 properties. That is a lot of units, is a lot of properties. I'm sure it was a lot to put that deal together. Congrats to them for getting it done. $2.4 billion. So it just kind of shows you that the follow the leader philosophy, a big owner-operator, a big Fannie Mae, Freddie Mac lender, structuring debt, refinance in this market. Hey, if you're able to refinance, it's time to consider that. It's time to take a look at that. In other news, we see that the country's state by state is opening back up again. It'll be interesting to see how quickly that occurs and to what extent that occurs, but that's certainly a positive sign. We're also seeing continued investments in opportunity zones. Opportunity zones were, designated areas that were financially struggling and not getting enough investment before all of this went down. And now, of course, more than ever, they're going to need investments. The good news is one of the companies that tracks investments in opportunity zones across the country, Novogradac, they have multiple funds, and they're tracking over 10 billion in equity raised just in their little slice of it. That's not bad. And in Colorado, the state I broadcast from here, they've got over 220 million in planned opportunity zone investments. That is not chump change. That's a significant amount. So that's another positive thing to see. And lastly, for the weekend, I'd like to give you something to think about. So my question is, how can you make your apartment feel bigger? Is there any way to make your apartment, just feel like it's a bigger space? Yes, Yes, there is. And it's called virtual reality glasses. I got a pair of these. They're not a sponsor or anything. And I'm not selling these, but they're pretty fascinating. Yeah, throw these things on and all of a sudden, those four walls go away. You really do feel like you're somewhere else. And as we move forward in the acceleration of technology that is occurring during this virtual work from home environment, stay at home environment, it'll be fascinating to see if multifamily property owners are able to leverage this sort of virtual reality experience to create more spacious feeling apartments. I mean, what did people do in the old days? Is it like put mirrors on the walls or something like that? I don't know. But now, virtual reality glasses, they do it for real. So it's an interesting thought. I just want to leave you with that for this weekend. I hope everybody has a great weekend. Come back to see us again on Monday. This has been another edition of Rate Desk. I'm your host, Michael Thomas, signing off.